Good morning, everybody. 24th of November. Hey, I first want to say thank you for everybody who joined under the Black Friday special. I sent everybody out an email letting you know the next steps to take so that you're all fully set up and ready to go. We got a whole bunch of requests to join overnight. I know the time deadline passed, so we decided to extend everything to Cyber Monday midnight. So if you have your request in or you still want to buy, we got a couple really killer deals. Check us out at tradelikeagenius.com, and we'll accommodate you under the Black Friday prices till Monday midnight. So take advantage of it. I think you'll be really happy that you did. Now I'm going to shift gears here and talk gold, and I'm going to do this for every sector for the rest of the weekend. There's some tremendous opportunities in front of us. You know, volatility brings opportunity, and I think we're having a shift and a reset. I'm not in the global deflation camp. I'm in the global stagflation camp, and that's going to benefit the precious metals. Now, I'm of a belief that when China had a problem at the end of 2015, gold and the miners had their first pop, and they tried to bring it back down, and then at the end of August something happened. You know, some insider somewhere, some shape or form, all of a sudden the price of gold stopped going down, and these were calls for gold 800 during this decline. And like anything else, when you have big money trying to enter into an asset class, they try to drive it down, blow out the weak hand, because they know it's going to go back higher, and they're just looking for best average to get position, but they know they can drive out people who just can't stay in the game, just like playing all in with poker. You know, they could drive out a player who's not that strong. Even though they may have a strong position, they don't have the collateral to stay in the game. And so we bottomed right here, and this is a daily chart, and I'm going to show you just a couple things, because, you know, climate and weather. So, you know, this is basically the 818 moving average. To me, that's weather, and I trade down on the 4 hour, so I'm always looking at that as part of the tool set I use. This is the 100 to 200 day, and this is climate. All right, so now, you know, we broke back up above the 100-day moving average. I'm back into now recovery mode here with gold. We're rounding bottom here. You know, some could say this is a cup and a handle forming, and this is a linear regression. So this is you know, basically 2 standard deviations below the 100-day channel. This is 3 deviations up. I like to have an extension up here because when I trade the ultra ETFs, anything that pushes up above 3 standard deviations, you want to probably look to short it or get puts, etc. But that's also where the 200-day is. And so we're coming up with PAL in December. There's a huge hue and cry now in the financial community for this guy to abate. And, you know, a lot of times you want to say, hey, they're just big babies, but people don't realize that the short end of this credit market has gone up over 200%. People borrowed short duration. They're getting absolutely crushed, and we're going to have a major bankruptcy of a major, you know, Dow component or major S&P 500 component. Look, PG&E, a utility, is about ready to go bust. GE's having problems. IBM's having problems. And my dogs are probably going to bark here in a second because they're going to get fed. So please bear with me with that. And so the Fed does not want to get blamed. And Trump, masterful, put it right in front of them, got in front of that thing, because he knows everybody would blame him. And so I think they're going to stop after December. I know people think I'm crazy. They think they're going to raise all through 2019. They absolutely will not. They'll cause the markets to absolutely collapse. The emerging markets are in serious trouble. We have serious dollar shortages, and it's causing too many wealthy elite connected people too much pain, and they're going to put the pressure on the bankers to stop. Plus, Europe is probably going to disintegrate in the next 2 years if Italy blows up. That's good news for gold. Sorry for the monologue, but I think this sets up my thesis is that gold's going to go. So I'm looking for this. Once it climbs over this 200-day moving average, we're back in full bull mode. All right. Now I'm going to give you more perspective on this. Here are the last gold. Here's the last gold bull markets. Okay. You have, starting at 2016 here. Okay. So far, pretty normal. Sometimes gold has, I don't call it trouble getting out of the gate, but it's grind. These are gold stocks, by the way. And then they just explode. 2011 was a quick 300% move. That's the last one we did, and then they collapsed it back down. That's why I've been telling people who've been listening to me on these videos is that you just got to get in some of these names, make sure that the companies are viable if you're going junior miners, and just hold on. You're going to make 300-400%, and these small names maybe 500-600%. And if you trade options, obviously you can get into the thousands of percent if you time it right. But you don't have to do that. You just keep grinding it out, and that's what we're in. And our biggest one is that we like the best is, and I'll talk about these later. We like Barrick Gold, we like Goro, we like First Majestic, and we like Pan American Silver. And those are names that are all going to make you money if you just bought them now and sit on them for 2 years. If you didn't even trade them, you'll make far more money than you will if you just had your money sitting in the stock market. So that's the one. And then the other one is that with the bankers, you watch what they do, not what they say, and they poo-poo the here we go. Gold, they call it a relic, they call it interesting, they call it an heirloom, not important. But look what the hell they're doing. All right, they're buying it like crazy. All right, so I think part of this thing they're going to get out of the debt is they're going to reflate gold. They're going to create some sort of environment where they could do, I call it a debt for equity swap at the government level, and they're going to use gold as their ability to reflate and to retire debt. So you need to own it. Okay, and when I say gold, I'm talking gold/silver. I'm more of a fan of silver than gold only because the ratio is so out of whack, and silver gets used and consumed in industrial side. So anyway, I'm going to talk uranium a little bit later today, and I'm going to talk the stock market a little bit later this weekend. But again, thanks if you just joined us, and I think there's tremendous opportunities in front of us. Guys, have a great weekend. Bye-bye.